Rachel Reeves is potentially going to stick in 4 mega taxes on us next week on March the 26th spring budget. A budget that shouldn't be here, a budget that was denied last October when Rachel said, that's all we're coming for. We've got what we need, a once in a generation budget, and here she is, cap in hand, tail between her legs, asking for more dough. So if you want to find out what 4 taxes she's possibly going to bring in, stay tuned. Let's get into it. Hello MV UK, I'm Pete. Welcome to the channel. Thank you ever so much for tuning in again. While you're there, could you hit the subscribe button? It really means something to me. I want to push the channel out to new people with a shared interest and a similar pattern of thought like you. Very intelligent and articulate people. Clearly, don't know why you're tuning in. No, I'm joking. So it would really help if you can subscribe. Just a little subscribe would be good. A like would be double good. But there, I'll leave that with you. Anyway, let's get into this. So next week, March 26th, we've got a spring statement from the Chancellor and Liz Kendall. Now, this is worrying because last October, when she literally stripped out the country of any kind of cash we had or had left, including going after every demographic of person you don't want to go after, OAPs, they've gone after our nans and granddads, farmers, they've gone after our food supply, students, they've gone after the future generation of brainiacs, business owners, they've gone after the people that generate, motivate and incite positive forward-thinking drive and behaviour within the economy. Nailed them. And now they're coming back for some more. They've realised that they can scrape a few billion from the disabled people. Disabled people, please. Labour have no shame going after PIP payments. If you didn't know what PIP payments was, check out this video here. That will take you through it nicely. A lot of people are tuned into that. Thank you. But anyway, so let's get into it. So tax number 1 would be hiking up the self-assessment penalties. Now, if you're self-employed, a sole trader, a self-employed person of whatever entity, every January it's legal that you have to tell the tax office what you earned last year and the money that you're going to pay in taxes. Now, this is a big thing for self-employed people. Imagine your local builder, your local plumber or your local beautician. You know, they've got a lot of moving parts there. They're not hardcore business people. They're people that have a talent, a passion, and they charge for that and they make a living, a modest living, I might add. Now, if you are late filing your return on the end of January, you get fined. Fine currently sits at £100. Now, what they're thinking of doing, because that fine hasn't been changed since the late 1990s, Rachel from accounts is thinking, there's a bit of inflation there, a bit of money we can scrape out the bottom of the barrel. So she's going after it. She thinks that she could hike that to £500 or £1,000. That is not what you need. That is definitely not what you need as a small sole trader, business owner. You don't need that. And the problem with that is, from my own experience of being self-employed for 15 years, is that sometimes when you get to the end of January, if you're not very money efficient at saving and squirreling away your money into saving account, you're going to have a bill. It could be like 5 grand, 10 grand, 20 grand, depends on how successful you were in your business. And you can't find it because you've had increased cost of living thanks to this Labour government. Everything's going up. Business is slowing down. It's incredible to watch. It's for all the wrong reasons. Anyway, a lot of people fall foul to this. Some people actually say it's cheaper to pay £100 and get a couple of months extra leeway to find the money. They're coming after you. They don't care. They don't give a damn what your circumstances are. What they see is black and white. You've made the money, you pay the money. No mitigating circumstances, like you could have had a funeral to pay for, you could have had to buy a new boiler, you might have had to go emergency, your mum might be abroad and she might be ill and you have to go over there and care for her. There might be all of these factors that prevent you or cause you to use your tax money for life. And that is heinous to be taxed on that. That is personal to me, and I know a lot of you it will resonate with. In fact, let me know in the comments what you think of this. This was the big one for me. So another one, so a second tax that she could bring in, which is a bit heinous as well, is slashing pension tax relief. So as it stands now, if you're employed in a company, and if you don't know this, it is your God-given entitled right, you can have a contribution pension scheme. So if you put in 50 quid, the government puts in 50 quid. So what they're thinking of doing now, right, it's not, that's layman's terms. It's actually in tax relief. You earn the money in time on interest. It's a video for Martin Lewis, or video for someone like Black Belt Barrister. He would relish on that sort of thing. And you should subscribe to that channel. That's excellent. But yeah, so you've got they're thinking of taking away the 20, 40 or 45% tax relief based on what you earn as a salary, and just slash it down to 20 to 25%. This is going to save the government billions and billions and billions of pounds off your bottom line. And they will try to spin this as a win for working people. So what they're saying is the wealthy are going to pay more, the lower class are going to get a bump up. It doesn't work like that, because generally the lower class, the working class, the feet on the ground, the regular Joe, your next door neighbour, me, we don't have any spare money to put in a pension. What are you talking about, man? Like all these people, oh yeah, save your pension. If you are living hand to mouth, like most of us are, one paycheck from homelessness, you ain't even got 25 quid to put in a pension monthly, let alone anything else. So I think it's a bum tax, and a very, very harsh reality for many middle class people who actually have a small amount of surplus income, which actually they don't now because of the 20% VAT put onto private schooling. A lot of those middle class families who are skint but want to do right by their kids, they are not getting, they're not going to get this tax relief. So that's a bit rubbish. Okay, so third, taxing your company pension. So as you know, we all get a state pension when we're older, and some of us can actually, and that's what I've just talked about, and some of us can get a company pension. So if you work for a big conglomerate, a corporate, or a monetary savvy company, they will offer their own pension as well as the opt-in scheme the government offers. So you can have like a high growth pension through your company, which is going to be sound because they'll have done the legwork on it. They're now thinking of adding a tax to that. I mean, let's think about it. The national insurance grab, NI grab, that they did in October on employers' national insurance has generated £25 billion for the Treasury. So taxing your company pension, they're kind of thinking and getting a different result from outcome that is going to generate a ton more money. It will, but what it'll do is it'll just stop people investing in the company pensions. And that for there will cause a ripple into the stock areas, because that's what pensions are. They're floated in investments. And it will just fizzle out any future monetary value to pensions to the country in the future. So another poor policy that's going to ream us now, get nothing for the future. And then fourth, finally, and I'll probably wrap up and leave you on this, because try and keep this to about 10 minutes, is that you could extend the VAT grab. You know how they've destroyed private schooling? They destroyed private schooling. It's incredible. They do a VAT charge on it. Now they're thinking of doing a VAT charge on private health and dentists. Now this is bad because it means that you're just not going to be able to afford dental practice. You're forced to go private because you can't get a dental appointment based on the amount of immigration we have. I'm sorry, but that's what it is. The high level of immigration that all demand NHS free at the point of illegally breaking into our country, and you get free dental care, yet us mugs who have paid in the system all our lives can't even get an appointment. Can't get one. You have to pay for it. My local, I acquired to a dentist, £120 just to go across the threshold. £120. I said, I know what I need. I need 3 fillings. And they went, no, you got to have a checkup, 120 quid. You got to have a clean, 80 quid. And then you got to have x-rays, 40 quid. I mean, that's the best part of £200 before I've even got what I know I need. It's a con. So they're going to get wasted. So that price, 200 quid, is now going to be 240 quid with an additional 20% on it. So even more money for me. It's just out of reach. It's not fair. So anyway, that's my rant. I mean, and look at that enamel. I mean, I'm all right. I've got pretty strong enamel, but some of my friends haven't, you know, and they're very conscious about their teeth. It creates mental health anxieties because they're constantly worried about their teeth. So whilst some of you out there might be hard-nosed and say it's vanity, shut your mouth, other people out there might be more empathetic with that situation. So let me know in the comments what you think about putting 20% on VAT onto private healthcare and NHS. And while you're doing, if you're finding value in this video, hearing about these 4 stealth taxes, do us a favour, let me know, and like the video if you think it's about right. So just finally to wrap up on one, no, I'll do it on another video. So I'll leave you there and I'll say thanks ever so much for watching again. It's Pete from MV UK.